Alex, you just heard Steve's report. Welcome, by the way. You have a similar take on the consumer?
Look, I think his view on the consumer is correct in terms of a stronger holiday season. We certainly observed that on my end in soft lines retail. Holiday came in better than feared. Even the third quarter came in better than feared. And you see that in the stocks. They've rallied, 20% into year end. They've given up a little bit of that. I will say we did see some weakening here in January, though in the traffic data that we monitor, though that appears to be mostly weather-driven, and we've seen an uptick here in February. The tough thing, though, I will say, is that we are facing some of our hardest traffic and thus sales compares of the year here in February. So it may mean we're having retailers facing a weaker fourth quarter exit rate as well as a first quarter entry rate, which is part of why we're a little bit more cautious here.
Yeah, and cautious on some, less cautious on the other. And I'm just going to flip the notes over, because just going back in my history of doing this a long time, Alex, I would say something like luxury tends to hold up better because rich people.
Sure. So the way we think about who can hold in better this earnings season, I mean, for me, there's really two things we're focused on. It's positioning, where do these stocks sit, and it's also where can they guide the year. Right now, as I mentioned, our stocks are sitting at valuation highs, which is really tough, limited short interest, very bullish. And then on the other end, we're a little bit worried about the guidance in terms of this weaker demand trend I mentioned, as well as recent precedent. I think for us, one of the ones that fits the narrative you mentioned is Lululemon. We're pretty positive there. I think that recent high-frequency data for that consumer, the pressure that we've seen, looks a little bit overblown, and they can actually guide the year a little bit better than expected. We have seen that, though, resilience in the higher end. I don't cover luxury per se, but I do cover higher-end businesses, and that has been a theme and appears to have remained the case through holiday.
Yeah, well, look in here. Also, on the other end of that as well, you hear so much about these I don't know what the discounters, I guess what we call them, the Ross stores, the TJ Maxxes of the world, that sort of treasure hunt mentality is what they call it. People love going in. You're nodding your head. I hope I'm getting this right. You go in because you don't know what they're going to have, and you're always kind of hoping to find that gem. Is this a counter-cyclical play, or would a Ross do well even in a good economy like we have because people just have more money to spend?
Yeah, so you bring up an interesting point. What we've seen in the off-pricers in the last couple of years is actually more so underperformance versus history and their typical historical algorithm, while the low-income consumer has been under more pressure. TJ is the one exception to that. Now, as a result, we have TJ Maxx sitting at margin levels that are in line to above pre-COVID. That is incredibly unique in my space. And so while that's the case, the thing trades at really great levels, rich valuation. It's very appreciated. It's been awarded and rewarded in the right way. But it's also part of why we actually like Ross a lot in the group. It's our preferred given its historical track record, very consistent. It has an ongoing margin recapture opportunity, similar to what I spoke to on TJ, but TJ's already there. Ross still has more to go to its pre-COVID level. It's also at the lowest premium to historical valuation in that off-price group. And as the low-income consumer isn't worsening, I think that's a great tailwind. But I do think you're hitting on something, which is as we're approaching this quarter where we're a little bit fearful, the risk-reward skews to the downside, I do think off-price can be a safe haven as they typically give, conservative guidance and as they get this low-income consumer potential tailwind, maybe trade down too.
As opposed to, I guess, a Gap and a Macy's, which you say proceed very cautiously on.